Well, welcome to another workshop. What is it? What is this
It's
called?
Wednesday.
Workshop Wednesday, brought to you by schoolofbookkeeping.com.
Oh, wait, there's another W in there for weekly workshop.
Right.
Wednesday. But we hiccuped.
Yeah. So we took last week off, but we skipped over, and here we are again in another workshop. So we're going to be continuing our series on payroll fundamentals. I got my payroll shirt on, rockin' payroll.
Oh, I have my School of Bookkeeping shirt on.
Yeah, and Kate has her
stripes.
Tommy Hilfiger shirt. I forgot the memo.
I usually wear stripes, so somebody has to.
Yeah. Right, somebody's got to wear stripes each day. Yeah. So what we're covering is really just as the name implies, fundamentals of payroll, not necessarily product or service specific. So QuickBooks payroll or ADP payroll, as Kate would attest to, carries some of these terminologies, as you're adding payroll to your business. But that's really what we want to talk about in this payroll fundamentals, is laying the framework of really what payroll is, and the main concepts of payroll. And today we're going to be talking about payroll costs. Can't say that. There's too many STs, because payroll does have a cost associated with it, not just the wages that you as a business owner are paying your employees, but there's other expenses that go along with that. And I've seen countless times, people accounting for their payroll activities through the net of a check, right? Because that is the money movement, yes. But there's actually more that goes on behind the scenes, right? Right, Carrie?
Yes. And the most important thing you need to make sure you have set up, among many, is you need gross wages set up so that your W-2s at the end of the year, that cover sheet W-3, has your total wages paid to your employees for the year, matches your P&L. If you start just running this money in, money out nonsense, you're not going to get even close to that number. You're going to have a mess.
Now, you mentioned a term, gross wages, which we haven't even talked about. Gross versus net. So let's talk a little bit about that. So when you mention the word gross wages, are you talking disgusting?
No, because
they smell horrible.
No, you don't. You're not really disgusted with them because it begins the journey of getting paid. So it's the amount of money that you're to receive, whether it's salary or your hourly total. If you worked 40 hours at, $100 an hour, that's $4,000. Yeah. Can't do the math in my head. That would be your gross wages. If you're paid.
That's why you have QuickBooks to do the math.
Yeah. The math, you want the math to track for you. So that's your gross wages in that example would be $4,000. If you are on salary, it's a set amount, not based on your hours. So no matter which way, whether you're paid per hour or you're paid per week or, salary, expected to work 40 hours, that is your gross wages. And that's the number you start with. My kids, I always laugh when they got their first paycheck, no matter how many times I told them, you're doing the math with your calculator, you're not getting that 4,000, not that they were making 100 an hour. I just needed easy numbers. You're not getting the whole gross wages. You have to have stuff come out. So they'd come in the house. I mean, I have 4 kids, so it was like clockwork. What is this crap?
Like, you could set your clock to it, because it'd be like they get their
always
paycheck,
a Friday,
and then
they'd come in and they'd rip open their check and they'd start screaming, what is this FICA nonsense and Medicare? What is this? And
who is this? And what has he done to my money?
What has he done to? What are they? I think they're stealing from me. Yep. So we have to calm them down. no, and explain. And then the next time they yell at us is when it's time to do their tax return. And they told us they were so angry that the money was coming out so aggressively from the front end. They wanted their big refund. I'm like, that federal number is really just a savings account held by the federal government. Do you want them to have that money for you interest free? Or do you want to keep that as low as you can legally? And then your refund won't be as big. So you can't get mad if your check is low, because you'll eventually get it back, especially if you're a young kid that, doesn't have a lot going on. But explaining it to kids is rather funny. And
I even get business owners that call me and they're like, why is ADP taking out these things, and still having to explain that it's the government and I'm going through everything. So it's not just kids. Everyone doesn't know exactly what it is that goes into payroll. Sometimes adults. And it's always entertaining, the questions that I get, but it varies. Even everyone needs to know.
So out of your gross wages, there's for the employee, there's 4 things that come out of each check. I'm not going into we're doing fundamentals. We're not going into health insurance, 401k benefits. Forget that. You have your gross wages and you're going to say, okay, employer, I want you to take out this percent, or I select these choices from another form, W-4. But basically what it boils down to is take 10% of my payout for a federal tax and put it over in this account on my behalf. And then you can turn around and file your tax return and see if you were close to that number. And if you weren't, you owe in. And if you were, you get a refund. The same exact thing happens to your state number. Boom, same thing. With FICA and Medicare, it's different. That comes out and you see that later in life, if you're lucky. And that's not what we're here to talk about.
I'm not expecting that, but
7.65 of your check comes out no matter what. So you will never get the $4,000. It will always be less the FICA, and that equals your net pay.
Right.
And
so that was a long answer to a short question. What's the difference between gross versus net? But gross is what you should have been paid, and then the net is actually what is actually deposited into your bank account, or what
your check is. And,
right.
And 4 things are going to come out of it. Even if you choose 0 for federal and 0 for state, 4 things are coming out of your check, 7.65% at a minimum. That's the employee's viewpoint. Then this is where the businesses get all like,
wait, there's more.
No, you don't that's not it. And so now you're the employee, you're mad, but you're going to get your money later. 7.65 is just your retirement, so to speak. So you're good. So we got them calmed down. Then the business owner is like, wait, what? So the business owner has to match the 7.65, which is good for the employee, right? Employee's not mad. Now they're like, oh, wait, they're matching that? Yes. But they also have to pay into the state into an unemployment bucket. So, and it's not necessarily for if Carrie quits. Carrie doesn't go to that bucket and get the money back. But if I quit, I go to the giant bucket of all the different businesses that have paid in based on percentages that the state, it's all based on your state and how they calculate it. Those are sunk expenses. There's nothing you're going to get back. It's just part of doing business and having employees. And then the final expense that and federal at the end of the year, and it's a weird calculation how they do it. The federal has an unemployment bucket they want to fill too, 0.08%. So there's limits and there's max and there's all these things, but there's no way around it. You're going to pay 7.65 for every gross wage you paid your employee. That's your expense. And then your unemployment figures I can't throw numbers out on that because it caps.
Yeah. And we'll talk about those specific deductions and company contributions and those types of things when we get to that topic. So I'm going to put a pin in you talking about those those things, because we will talk about them at a future workshop Wednesday as we work through this list of topics. We kind of itemized it out, and if we did one topic every week, we're still looking at like September for us to cover all of these topics. So we'll get to that, right? But I mean,
and this is what I used to do too, is just if you wanted to budget, what's a good number to budget? Because you have your 7.65 for your FICA, and you want a round number. I would say whatever your wages are, and you have to have a handle on that. If it's going to be a set wage or you're going to pay somebody hourly, and you really have to understand overtime because that can, but 10% of whatever you're paying your employees is just a good round number to budget when you're starting out. Your state may be different, and we'll dig into all.
Yeah, I think the rule of thumb is 1.25 to 1.4 of what their salary is.
Okay.
To kind of cover all the extra fun things.
The extra thing. Now, I had a client who was using QuickBooks Payroll, and they loved this report so that they could use that to budget, because they had a specific bank account just for payroll activities. And QuickBooks has a total cost of payroll. Every time that they ran payroll, there is a report created after they create the paycheck that says total cost of payroll, which includes all of those things that we just now mentioned. Does ADP have something similar to that?
Yep.
Kate?
Yep. We have the payroll liability report. So in that report, it breaks down how much like the live checks are, the direct deposit, the taxes, and then what each tax was. And then it gives you a big lump sum at the bottom. So if you want to break it down individually, or if you want to just look at that bottom number to see all of payroll. But yeah.
And when you hit submit, it says words like, do you have this much in? Are you ready for this yet?
It asks you, I like to call it the checks and balances page. It asks you twice. So it tells you in the top left-hand corner, is all this money in your account? Because this is what we need to pull. And that includes the payroll and the taxes. And then when you go to hit approve at the bottom, another box comes up and it's like, hey, just want to make sure you have this money in your account, because some people just think of the net pay and that's all they need to do.
Right.
So we make sure kind of checks and balances, throw it all over, and it's in like a big red font just to make sure that you actually have the money in the account before you go to hit.
Yeah, I was just seeing on our one of the Facebook groups that I'm a member of, they made a mistake. The person made a mistake, and they didn't have enough money in their account to for all of those things. So it basically put a hold on not only their account but all of their clients. So it was a big mess.
Wow.
Because they didn't have the money in the right place, so that when it came time to drafting the total cost of the payroll, it really put a damper on their day during tax season. That's for sure.
I can't believe it locked up everyone's account. I know we have ours where the accountants have all their clients on there, but if one client, we call it NSF. If one client NSFs, it's just locked on that client. I can't believe it. I
think that was a mistake. That was a mistake on the part of the payroll service. And I think they're looking into why that actually happened, but that's what did happen. And that certainly will get your attention when all of your clients can no longer do payroll because of something that happened. So obviously you're going to get it taken care of pronto, but you don't necessarily have the time to do that during tax season as you're trying to do other things in that deadline. So the bottom line is that we want to make sure that people understand when it comes to the total cost of payroll, that there are more costs associated to a business than the net of the check or even the gross of the check. There's expenses on top of that that are paid on behalf of having employees. And those are things that you just want to keep in mind. Now, next week, we're going to talk about employees versus contractors, and making that decision, because if you don't have an employee and you have someone who's a contractor for you, then you don't have to be concerned with too much of that. It is just gross wages, but there's some other considerations that come along with that when you're determining, should I have employees or should I just have contractors working working with me? And then, of course, if you're using a payroll service, there are costs associated with running that payroll service. So always kind of take that into consideration when you're evaluating payroll services. What is the cost of that, and what am I getting for that payroll service, right? So make sure you understand what the features are, because typically in most things in life, you get what you pay for, right?
We've seen too many people say, "Oh, that's so easy. I can do it myself." And one payroll notice will wipe them out.
Yeah.
Whereas if you just pay for ADP, I know it's covered. Well, you can get it covered. And no matter what notification you get from the IRS, you just submit it right there and ADP takes care of the fine. So.
Yeah, because it's always, I think, Carrie, you said it best, that it only takes one payroll notice to pay for, pay for the payroll service and realize, oh, I'm out of my, I don't want this burden of responsibility to be doing that.
Yeah.
Yeah.
So that kind of wraps up our topic on payroll costs. What is the total cost of payroll? We'll have this, of course, a replay on the Workshop Wednesdays on our YouTube channel. And then what we'll do is we'll use this content to create the Payroll Fundamentals course, that we're working on at schoolofbookkeeping.com. So I want to kind of switch gears a little bit because we had a question come up in our quick answers, and Carrie, while I'm bringing that up, what is quick answers? Can you tell the fine folks that are watching us what a quick answer is?
Is where you have the ability to chat and get a quick answer on something that's pressing, so you can get back to what you're doing.
Yeah. So we have the ability for our members at schoolofbookkeeping.com to reach out through our website and ask a question. And if it's not addressed in a course, we can speak to that right then and there and get them back up and running here. So we did have, where'd it go? Oh, I'm still trying to pull it up here. All right. So the question was, do you have a video on restaurant accounting? Right. I'm struggling with on how to take sales reports from a point of sale system that does not integrate and journal entry them so that inventory, COGS, sales, and expenses are correct. Right. So we don't have a video on that. So we're going to create one right now. Right. On the fly and how to do that. So
the first thing you're going to need is their Z-out report.
What is a Z-out report?
Well, that's a good question. It's kind of like we're throwing out these payroll terms. So Z-out report is something that all point of sale systems, even
this goes actually back to cash register days, right?
Cash register days. They give you a Z-out report. So at the end of the day, the cash register person, which, by the way, I wanted to be one when I grew up because I thought they got to keep all the cash. Then I found out they did, and I was like, oh, no fun. But anyway,
so you came home and told your parents, I don't get to keep the cash in the cashier.
I wanted that.
Also on your check, you have taxes taken out.
I know, that was bad. But the real sad thing was when I was little, that drawer that popped out for you to give change, I thought the cashier got to take it home. But anyway, she doesn't, or she wouldn't last long. But anyway, so at the end of the day, everything balances out and it's summarized on a Z tape, but they can do the same thing in any software system. So they're totaling the numbers that you tell it to total. So it's all in the setup, like everything else. And what you want to do is to study that Z-out report and create a template in QuickBooks, online or desktop, doesn't matter, so that you can key in those new numbers. We used to have to do that.
So the Z actually stands for what?
Oh, you're going to answer that because I have no idea.
Zero. Right. You're zeroing
Zero.
Right, because the
See, I
cash
get so
register.
stuck in acronyms, I forget that there's a reason they have that. Okay.
Right, so your cash register, all it does is add up sales, over the course of the day, and at the end of the day, you want to start over, and you zero that out, so that the next day you're starting at zero, and then that day's sales is going to increase, and then the next time that you zero out, you get your report. So that's the idea of what a Z out. There's also an X out, but that's a shift report. So
Yeah, no, don't go there.
but you just zero out at the end of the day. So you want to mimic that in your QuickBooks, right? So
They'll be in, they'll be out.
So I'm just in a sample company here. So the way you want to handle this is you want to mirror what your Z out report looks like. And this could be, if you're using like Clover or, Square point of sale or Shopify point of sale or QuickBooks point of sale. I mean, they all have some kind of report that will show at the end of the day, here's my sales, and here's the payment methods that I took throughout the course of the day. So that's what you're going to be mimicking by creating it. So you would create some products and services to be as detailed or not as you like, right? So you can just if it's a restaurant. So I'll use the example of the question. If it's a restaurant, you may want to know food sales versus beverage sales versus alcohol sales, right?
Yeah.
And some of these things may actually have certain sales taxes tied to them. So it really just depends on that type of how much information you want to have versus what do you want QuickBooks to know about, right? Like point of sale, QuickBooks point of sale, you have the ability to just send over summary sales, and it's taxable sales or non-taxable sales. That's really all it's concerned about. And then it will do that for you in desktop, right? It will create the daily sales summary for you. But the other caveat to all of this is how people paid for goods and services in that environment, right? Because you have cash, check, credit card, gift cards, those types of things. So you want to also put in on your items the payment methods as well. Because I had a client who was a mail like a UPS store, but it wasn't a UPS store. It's that mail stop, type of stuff. And they had a proprietary point of sale system that did not integrate with QuickBooks. But what he was doing when I met him was he was entering these things in as journal entries. He was taking that Z out tape and then putting these in as journal entries. And then it was a mess, right? So
I like to do sales receipts. That's how I like to do it.
Yeah, a daily sales summary is a great way to mirror the Z out ticker report, right? But you want to start by creating items. So you create the level of detail in the items that you want. You were saying something before.
Well, what I was going to say was, see how it has inventory option. You don't want to do inventory because your point of sale is going to be the source of truth for your inventory. Right. What you want to draw the line in the sand. I know a lot of times you're really itchy to put in both places. Don't let the point of sale manage your gift cards and just keep the balance over here in QuickBooks. Same thing with inventory. Let it do a journal entry, and you can do that by setting these things up.
Right. So I'm just going to create this as a taxable sales item because we're going to just make it super simple. We would leave, the sales price blank, and then we need an income account. So we'll just choose sales of product income, and if we want to, we can choose, the various. And let
you want to do that,
this,
or do you want to?
It depends, right? It depends. What you're doing with sales tax inside of your QuickBooks, right? So if you're using QuickBooks to help you calculate sales tax that was remitted and make those payments, then yes, you want to you want to let QuickBooks do the calculations right there, because bear in mind, you may have a discrepancy from your point of sale system versus what you enter into QuickBooks if you have QuickBooks recalculate the sales tax, right? But if you want to just be explicit and say whatever's in my point of sale system is what I want to enter into QuickBooks, then you would create ultimately create items for those, so that they would so that there would be no calculation of recalculation of sales tax. Because you could feasibly have a rounding issue, right? If you have at the end of the day, $5,200 and some odd number of taxable sales, but on each sale is smaller chunks, you could have a rounding issue with cents, fractions of cents that would have been rounded up or down depending on how it fell in each of those sales. So it's just something to keep in mind.
Well, and also to just to get it further jagged on the edge there, restaurants have a weird sales tax, bed and breakfasts have a weird sales tax. So it's not like your typical inventory that your retail inventory. So it may be better if you have weird percentages that QuickBooks would have no idea of what those are. So just something to keep in mind.
So I am going to create this one as a non-taxable sale. This is the penalty of doing this on the fly. We don't have this already set up. We were going to do it in desktop, but we weren't able to get into desktop. This is non-taxable.
Okay, it does have food and beverage.
Yeah, because you can get, the nice part about QuickBooks Online over desktop is is the fact that the automatic sales tax has those various categories that are associated with certain sales taxes, so that you can QuickBooks can set those up for you, so you don't have to know the sales tax compliance with all of that. But feasibly, you've done that in your point of sale system.
Yeah, I was going to say, don't do. Yeah, be very careful. I've heard when people turn it on, it's not what they think. So it looks pretty.
So then we're going to create a tender type. So we're going to create another non-inventory item. This will be cash received. Now here, we typically want to put this into undeposited funds, but I don't think this item is going to let us do that. We'll see. And close. Oh, I stand corrected. Well, actually, I said corrected. So it did let us do that. So we're going to do cash here. And then we're going to do duplicate it. And just for brevity here, we're going to just put credit cards. Now, what you could do is you could have one for each type of credit card: Amex, Discover, American. I already said Amex, Visa, MasterCard, because sometimes those get deposited separately, right? So Discover and American Express, they fancy themselves better than the rest, and so they deposit on their own schedule as opposed to Visa, MasterCard, which are lumped together. So again, it really just depends on how much detail you need to know so that your QuickBooks reality matches your reality. But I'm just going to put credit card received and credit cards. I can't type and talk at the same time as these items. Card received. Okay, and these are actually non-taxable, so I should have done that with cash. Done. Same close. All right, so we've got one for taxable sales, one for non-taxable sales, and the tender type. So in our example here, we'll just say we sold $4,000 worth of taxable stuff and $1,000 worth of non-taxable stuff, and we received what do you want the breakdown to be? 50-50? Carrie,
that sounds good. 50-50 is easy.
All right, so we'll make it easy. So The way you would do this is on a daily sales summary, but we're going to create that as a sales receipt. Right? You would create a customer probably just for generality, like counter sales or Z out. So you just create a customer that you would enter in all of these daily sales summaries on. You just use daily sales summaries as the name of the customer. Right? We would just use our taxable sales. What did I say? 4,000.
Sounds good.
Right. Now QuickBooks is calculating the tax on top of that, so you can see that the tax that was collected on that was $320. Non-taxable sales, 1,000. All right. So $5,320 was the amount that I brought in on the in income on sales, right? But I've received half of that with cash and half of that with credit cards. So what we're going to do is we're going to use our cash tender types, right? What is half? 2660.
Okay,
right?
that was good. Minus.
But it's a negative, right? Because this is a negative because this is tender type that is actually being received. That is, and it's non-taxable. That's why it's recalculating the tax. And then our credit cards, and we can break this out by Visa, MasterCard. Also 2660 as negative.
And yeah, you want the very bottom to say zero. Z report.
Right. So your balance due is zero, right? So you're handling all of the bookkeeping sides of things with through the items or products or services that you're setting up in your QuickBooks, and you're creating this daily sales receipt as a zero. So to match the Z out tape out of that as a $0 sales receipt.
But
and then
that's
what?
Not all, folks.
What?
You have to do a deposit.
Right. So once we save it, okay, and it's saved. So now what happened is those tender types of cash and check or check or credit cards or cash, they are now going into the bank deposit, right? So there's our two counter sales from those two different items, our 2660 and another 2660. There you see your cards received versus your cash received. That's going to be on a different schedule than when you choose when you charge a credit card, right? The money transfer starts that gets started right away, right? And that's all done automatically when you batch out your credit cards at the end of the day. The money transfer will actually start at that moment, and then you want to just match those deposits inside of QuickBooks. But you're not going to follow along and do the cash on the same day or as part of the same deposit. You may actually wait 2 to 3 days to actually do all of your cash deposits, right? So that's what's going to happen with those daily sales receipts is they're going to come in here into the undeposited funds, and then you can just group them together, all of your cash sales. So if this happens 3 times, right, and you've got 2660 each day, never going to happen. But I mean, as an example, you're going to take the $7,800 or whatever that equates to, and then take that down to the bank and make the deposit. So you would just click off all of the ones that are part of that deposit and make that one big deposit, so that when the bank feed comes in, it'll just match to that deposit that you've already made. And then you do the same thing for checks and credit cards and other tender types as well.
My rule of thumb is please do it daily. So that we don't have to figure out that Fridays was added to Mondays and then Tuesdays. Just do them each day and move on. And then the
Yeah,
credit cards, this is why we like QuickBooks payments, because the credit cards are much easier to match up. But there you go. That those are your credit cards that you have to follow and see when they do deposit them.
right. So by using a daily sales summary, you can mimic what's happening in the point of sale system inside of your QuickBooks. And then because you're using these items that you've set up ahead of time, the accounting is being done for you. So your sales are being tracked by the sales items, and your deposits are then being tracked by the payment items or the tender types. And then you can get more, granular and detailed. You can have discounts mapped separately, so you can keep track of those types of things. Whatever you want to get out of the daily sales receipt, you can do that in the daily sales summary. So, whew.
Wow. And this is why we like using integrated QuickBooks products, because it's hard. You can do it. It's hard. But once you set that template up, you can just pull that template up and pump in those numbers. It can get a little tricky around.
Yeah. So actually, I do have an example. Let me go in here. The same guy that did the. I'm in the sample company here, so let me log back in. We created a template, and you want to see. I just want to show it because it was.
And you can get
gnarly.
into each of these things.
Yeah.
That's where the customer really has to think about. If point of sale is holding your inventory data and sales tax tracking and things and gift card tracking, you don't want to have to duplicate all that work. You just want to know, okay, the balance is this, the details in this land, but the accounting and my bank account and my cash is here.
All right, let's see here. So I've got the recurring transaction. So yeah, that's one of the things that you can do is create these as a template, like a memorized transaction, and then you just utilize
the date.
Yeah. So here's his daily sales summary. If I go to use, right, and click it, he wanted to know, all the things about packing materials, office supplies, the mailbox rent, the greeting cards, UPS, FedEx, DHL.
And that should all be in his point of sale.
Right. It did. And it was in his point of sale, and it was on his end of day report. So he wanted to just keep track of all that stuff. So he had no problem going in here on a daily basis and then just filling out the dollar amounts, from his report. And he loved it. Right. And this is what we were talking about with sales tax. Because if you want, you don't necessarily need to have QuickBooks do the recalculation, or there was some.
You can just jam the number that this.
Yeah, you can just because that's part of the Z out is how much of sales tax was collected, right? And so we had the breakdown of how much was for city, how much was for state. We use those as items on the
38 lines. I would quit. I would. Would you do it, Caitlin? 38 lines every day.
No, got to get something that's in it, especially when there's other things out there that integrate with programs. It's time. You can't buy time. You cannot buy time. That's one thing.
This was his act. He liked doing this because it kept him engaged with the business, right? Like he could see how
retire or something.
Well, he ended up selling the business, right? So
now I know why.
Client.
If I had to fill out 38 lines every day, I think I would sell the business too.
So he had his things that he kept track of, and this was one of the ways that he kept track of that, because he could see, as he's doing these every day, he's like, oh, this is more than yesterday, or this was, we haven't done a lot of, gift wrap, in a while. So maybe we need to do. He would use these as a
instead of the point of sale.
Yeah,
I bet he had an old-fashioned cash register.
No, he had a a computerized system, and it did connect to QuickBooks.
They should have told him what your gift wrap is down.
He rather would talk to me than he. I mean, I can't blame him. then connect it to QuickBooks and pay the fee for connecting. But that was Yeah, that's one example of how detailed that you can get in the daily sales summary. But if you do have a way to connect those things and integrate with them, yeah, Carrie is a big fan.
They're great. Save some time.
Right. And that way you're just managing the data as opposed to entering, you know. We just had an interesting discussion about that with other things that, you know, what happens if you're sick, right? And you're the one in charge of doing these manual entries, right? Those things just don't get entered.
They don't get entered unless you do them. Yeah. So, yeah, then the sickness becomes your sickness. So, yeah, a lot of work, a lot of stress.
Sorry, I think I struck a nerve.
Yeah, you did.
All right. Well, hopefully you guys can join us next week for another Workshop Wednesday. We're going to be talking about the dilemma of, do I hire an employee or do I work with a contractor, and what that means for payroll. And we'll have some other question that we've fielded inside of QuickBooks to talk about on our Workshop Wednesday. Have a great week.
Have a good one. Bye.
Bye, everyone.
Thanks for coming, Caitlin.